How's it going, everyone? So today we're going to talk about a very important topic because it's the current market environment that we're in. We're going to talk about how I go about trading a choppy market. Now, there are numerous different types of markets, bull markets, bear markets, and then sometimes when things trade sideways, they get a little choppier. It's not as easy to trade. So I'm going to talk about how I go about trying to figure out whether or not it's going to be choppy because nobody really knows what's going to happen before the day starts, but you can kind of get a bit of an idea of what may happen just based on prior price action. So I have three main tips that I want to get into, and then I have some live trade examples on Tesla, both to the long side and the short side. It's Tuesday, May 17th. But before we do that, let's analyze the SPY daily chart just to get an idea of what I see and maybe how I can tell whether or not it's going to be choppy ahead. So it's clearly in a downtrend, but just because it keeps going lower does not mean that it's easy to short. So a lot of times when it can be choppy is when you have a bounce in the opposite direction. So clearly SPY is trending to the downside, and then you have 3 green days in a row going opposite of the current trend. So a lot of times, once you start to bounce into some resistance, that's where you can find some issues. And a lot of times that's where there can be a lot of choppiness because you have a really big battle between buyers and sellers. So clearly you had a huge move lower and then it starts to bounce. And then this bounce is where it can have maybe 2 or 3 days in a row, but anything more than that, and a lot of times that's when those days can be pretty choppy. And the reason it's choppy is because it's bouncing into some prior resistance levels. So you can't just expect it to go through that really easily. And being that it's clearly in a downtrend, you can have those bounces. And a lot of times, day 1 or 2 of a bounce, there can be some nice opportunities to the upside. But once you get 3 and 4, that's where it can be very exhausted or very tired as far as buyers go, because the move has already happened to the upside. You're now approaching big resistance levels. And even though you have people who want to buy the market, you're going to have sellers who are still in control. So a lot of times, that's where really big back and forth battles can happen, and that's what creates choppiness. So the initial opportunity is kind of on day 1, day 2, maybe even day 3 to the upside, going against the current trend when you're in a bear market. And then after that, that's where a lot of back and forth movement can happen, and it gets really tricky to trade. And then what usually happens is you have the big move lower, bounces back into resistance, and then a lot of times it starts to roll back over, and then it continues in the direction that it's currently going. Now, nothing is 100%, but this is just a basic concept of following the trend. And now let's use an example in the opposite direction. So assume that it's a bull market. So things are going straight up. Everything is strong, looks really good. On those pullbacks, sometimes it can be 2 or 3 down days in a row. Sometimes you can find some shorts there. It's not easy to short a strong market, but kind of day 1, day 2 to the downside can provide some short opportunities. And then the further down you go, you would think that buyers eventually step up. And then if they do, that's usually where it finds some support, and then it makes new highs, and then it continues to the upside. So there definitely can be some opportunities shorting on the first couple days, but then once it starts to get a little extended to the downside, day 3, day 4, maybe even day 5, that's where there can be a really big battle between buyers and sellers. And then a lot of times, being that the trend is up, buyers eventually win that battle, and then it continues to the upside, just overall trend continuation. Now, nothing is 100%, but this is just the basic idea of things going in the direction that they're currently trending. It's definitely not easy to trade counter trend. I am a big fan of going with the overall trend, but whether it be trending to the downside or the upside, the opposite move can provide opportunities, usually for a couple days. But then after that, that's where a lot of chop can happen, and it's easy to get caught in that. So now let's go over the 3 main tips that I focus on when I feel like I've identified a possible choppy market ahead. Number 1, avoid trades right at the open. I really want to wait 5 to 10 minutes. Waiting closer to that 10-minute mark usually is a good thing. I feel like that allows me to collect enough data to really figure out what things are going to do. The first couple moves off the open can sometimes be head fakes. And then after about 10 minutes in, I feel like there's a possibility to find clear trend and not get caught in any fake outs. And number 2 is I trade smaller size. So if I feel like it's going to be choppy, the last thing that I want to do is trade bigger size, because if I get caught up in that chop, that's how huge red days happen. And I make sure to lower my expectations. So this is a time just to kind of survive through the choppy time. I don't want to worry about trying to make a lot of money. Just try not to get beat up too much, and don't worry about a lot of P&L. And for me, my smaller size is 5 contracts. I just hang there until I feel like the market finally chooses a direction, starts to pick up again in terms of volatility. And then that's when, if something looks really good, I'll size up a little bit, maybe go 10 contracts. I did trade 20 contracts a couple weeks ago, but I'm realizing that 20, I feel a little uncomfortable. 10 is really that sweet spot when a trade looks really good and I take 10 contracts, I can get a nice move and have really nice P&L. And then the third tip is I make sure to be very open-minded to both ways, because buyers and sellers are having a big battle, still trying to figure out which way the market wants to go. So I have to realize that it could move one way for the first 30 minutes and then completely reverse that move and go the other way. So I have to be very open-minded to being able to think long and short and then just be patient and wait for quality setups. That's definitely not easy to do. I got better with it as I became more experienced. But one thing that I make sure that I'm always constantly working on, be open-minded to both ways, especially in a choppy market. And now I quickly want to go over some live examples of the trades that I took on Tesla, both long and short. So now let's get into the first trade on Tesla. And as you can see within the first 10 minutes, look how many different head fakes there were. So just not wanting to take a trade quick off the open, but it did have the gap up today. So trying to focus, going in the direction of the current trend, which is up if it sets up and looks good. And it actually created an opening range break to the upside. So it set the high at around 754. It did go back and forth a bit, had the lows right around 744. Eventually got back above the VWAP and the 9 EMA. It did have high a day above. So if it breaks that high a day, I felt like it was going to have follow through to the upside. And as it starts to approach high a day, I want to anticipate just a little bit. So I went long just before that 754 high a day break, expecting the upside opening range break to get a little bit of follow through. I went long 5 of the 755 calls and I got filled at $25.20. So it gets through high a day, has a really nice move higher. And being that it's a choppy market, I want to take quick profits like I normally do because things can turn very quickly. So I end up selling those on that nice move higher. I got rid of the full position, all 5 contracts, and I sold them at $24.84 for a small win. So now getting into the second trade on Tesla, which is going to be a short. So being very open-minded both ways. So I took advantage of the upside opening range break, got a quick move, then look at this nasty sell-off after. So if anybody's long above 754, they're underwater. I would think their stop loss would be low a day. So if it makes a new low a day, there's probably going to be a lot of stops hit, and I would think there'd be a momentum move lower. So Tesla really starts to speed up to the downside. I want to anticipate that low a day break. So I end up going short. I took puts, the 740s, 5 of them, and I got filled at $22.55. So it did break low a day, started to get a little bit of follow through. Being that it's choppy, I want to see it continue to go in my favor. If it starts to bounce, I want to get out. I can always reevaluate the setup. That's what it did. So I ended up just getting out of the position. I sold all 5 contracts at $22.65 for a very small win. So now let's go check out the P&L. This is a good example of just kind of managing my expectations. Even though I wanted to make more, it's okay that I didn't. I don't want to screw a good thing up. I have a green day. Just book it and live to fight another day. Made $320 on one trade, $50 on another to be up $370. Can't put up big P&L every single day, and that's okay. That's trading. Sometimes it's going to be a lot of break-even days, small red, small green. The one thing that I don't want to do is screw a good thing up and give that money back. So that was the trade recap and some of the tips that I use to navigate a choppy market. Hopefully you found some value. Thanks for watching the video. Feel free to like and subscribe, and I'll see you in the next one. Thanks for sticking around to the end of the video. I just want to talk about a couple cool things that I have to offer. The first is going to be my newsletter watch list. This is exactly what I post on my private Twitter 30 minutes before market open every single day. I do a quick analysis of the overall market, the SPY and the Qs, if there's any major market news that day, and then all the stocks I'm interested in watching. It's usually 4 or 5, if there's any major news tied to them, and all the levels that I think are in play. To the left, this is exactly what I'm posting on my private Twitter. I make sure to add that newsletter. I take a screenshot of the charts, green line to the upside being long, red line to the downside being short, and I make sure to highlight those 2 levels above. This is everything that's going on in my mind and my game plan going into each market open. Also, I make sure to add a little mental note because every day is slightly different, and here's an example of that. And if you want something that's a little bit less of a commitment, I do offer a live one-on-one call for 1 hour. This is where you can ask me questions about my journey, go over setups specifically, everything that I've gone through as a trader. Whether you're beginner or advanced, this is a great way to connect with me. So if you're interested in my private Twitter or the one-on-one live call, feel free to go to callmattdiamond.com or check out the links in the description below.